Hi friends, this is Kishore. Welcome back to my channel. Another good week in the market, both SPY and QQQ ended green. Let's see what the market internals is saying for this week. So I would like to cover US credit outlook change to negative by Moody, poor bond auction, Powell comments on IMF meeting, earnings scorecard, next week earnings, economic calendar, index analysis, seasonal chart, and one of my favorite book. And this is not a financial advice, just for knowledge purpose only. Let's jump into the show. So the fear and greed index it is showing fear. Though two green weeks in the span QQQ, still the market is in the fear sentiment. And the daily heat map, it's a sea of green. You can clearly see most of them are green. All the sectors are green. And the bubble chart, very few are under the bubbles are under the water. Most of them are above. And you can clearly see this one. The technology chips are leading win and very few are down like ANET. In the weekly sector performance, you can clearly see here the energy sector Excel is down minus 3.75 and utilities also still down and the real estate last week did really did good well but this week again it went thick red. Technology is the one the leading like 3.75 green and this is yesterday afternoon. So the Moody changed the outlook of US credit rating to negative, but they keep it that AA rating still. But how it will impact the bond market and the equity market is the big question to me. And this is Fed Powell's Lean's hawkish and IMF remarks. So in the IMF meeting, he said we are not confident that interest rates are at high enough to finish the battle with the inflation. So his target is 2% to bring down the inflation under 2%. And he's saying that right now, whatever the inflation is down is because of the improvements in the supply of goods, services, and labor. But they are almost to the peak, so they may not help more in the inflation to bring down and treasury 24 billion 30-year bond auction goes poorly. So on Thursday there is a bond auction 30-year bond auction and the it went very bad. So the directs and indirects is like was well below the 6 month average, means a measurement of domestic demand, and indirects a measurement of international demand was well below the 6 month average. So both direct and indirects are very less demand for this 30-year bond auction, and also the tail of 5.3 basis points, which means the difference between the two yields called a tail indicated a weak auction where the US government had to entice investors. So you can clearly see here in this chart, this is the almost 2011 lows of that tail. And we know that bond market in control, like when the yields rise, growth stocks, especially growth stocks and the SPY goes down. And if the yields goes down, stock market goes up. So right now we are at here, if the, because of this weak bond auction, the TLT went down on Thursday, big hit from the almost 90 to the 80, 87 or 86 levels, and then a little bit recovered on the Friday. And this is this week earnings. So basically, a lot of earnings came in the last week, and in that 59.6% of companies have reported 2023 third quarter revenue above analyst expectations. But in general, the long term average is 62.2%. So it is way below than 62.2, and also last 4 quarters it is at above 68.8%. So there is a big drawdown in the revenue expectations. And also in the 2023 quarter 4 there have been 15 negative earning per share pre-announcements issued by the S&P 500 corporations compared to 25 positive EPS pre-announcements. So a lot of companies are expecting or reduced their revenues for the fourth quarter. So in this slide, you can clearly see the 52-week forward PE is 18, but currently it is at 19.7. So the forward PE is lesser than the current PE ratio, which is not good for the SPX because the SPX growth or SPX value is calculated based on the growth and the PE. And one more thing is 1 year T-bill yield is 5.39 and 52-week earnings yield is 5.56. If it 1 year T-bill yield crosses this 52-week earnings yield, that's not good for the stock market. And this is earnings scorecard. So right now 455 stocks are reported earnings in the S&P 500. Out of that, energy financials are a little bit down compared to the other sectors, and even in the real estate and utilities also. So this below is like based on their expectations, EPS and revenue expectations. If they perform more than the expected, then it will come under the show in the above percentage. If their earnings and reports are below their expectation, then it will come here. So the energy, financials, real estate, and utilities all are bad compared to the other sectors. And this is coming week earnings. I really want to watch this Target, Walmart, and some of the few of the retail stocks, and also the C Limited. And this is economic calendar. So this week mainly the CPI is coming on Tuesday and PPI is coming on Wednesday, and on Friday building permits. So we know that CPI and PPI acts is very sensitive to the market, and in the past in the SPY at the time of lower highs, it is at the CPI and PPI are the turning points. Those are the days acts as the turning points in the lower highs. And also the QQQ, this is also same. Previously in the CPI and PPI acted as the turning points of the lower highs. And this is number of stocks about 20-day moving average in the S&P. So I follow this chart a lot. So I'll try to buy here at the time of 14 or 15, and I would like to sell at the 86 or 85 levels. So right now it's at 67.99. So let's see in this week whether it may go up and touch an 86 and come back, or like this in the past, like also at this levels it was went down. So it will do the same here. And this is S&P equal weighted, and the below chart is SPI chart. In the SPI chart, we can clearly see here we made the higher high compared to the previous high, but in the equal weighted, we still in the lower highs only. So which means the broad market is not participated in this rally on the Thursday and on the Friday. So only very few stocks rallied. That's the reason the S&P went up, but the broad market is still under the weather only. And this is SPY chart. It's a daily chart. Right now it is at 440, and it's in the clearly the previous resistance levels and the horizontal and also the trend line in the resistance level. So this week is a six points range. So it may go up 6 points up, or it may go down 6 points down. So here are my support and resistance levels, and there are two gaps here. If these two gaps are acts as a very good support to the SPY, if they hold for a long time, that is good for the SPY bulls. And this is QQQ. Again, in the QQQ, here is the QQQ, and in the below is the equal weighted QQQ. In the QQQ, you can clearly see we made a higher high, but in the equal weighted still is a lower high only. So it's not all stocks participated in the rally on the last week. So, and this is daily chart of QQQ. You can clearly see here right now it's at 378, and it made the higher high, and it is CCI is positive, and also volume is good. So the QQQ itself is really good, but only very few stocks are participated in the rally. That's the concern to me. So, and here are the support and resistance levels. And this is IWM. IWM this week is not performed that great. Still, it's going down, and one of the gap is filled here, and there is one more gap. So that gap acts as a support now. Hope this holds that gap this week. So the support resistance are 165 and 162, and the resistance is 174. And this seasonal chart, um, the dashed lines are pre-election years, solid lines are the regular one. So right now on Monday it's the ninth trading day. So this week in this box, this is the box for the seasonal chart. So looks like it is bearish to me, but let's see what it brings in the coming week. And this week we have OPEX week on 17th, and 15th is Vix expiration. This is one of the book I read. It's really good one. Martin Zink's like winning on Wall Street. So the points in this book is very related to the current market situations. He said like the major direction of the market is dominated by monetary considerations, primarily Federal Reserve policy and movement of the interest rates. So based on the monetary policy only, the market direction would be. And he said consider the equal weighted index, so that's followed by the regular retailers compared to the big index SPY or QQQ, because that is invested by the big investors. And finally, this is summary. Market is at very interesting spot, because we see that equal index weights did not make a higher highs, but the regular index made the higher highs. So I really want to know this week how this performs. And this week CPI and PPI data are important to watch, because CPI and PPI data days are acted as turning points from the lower highs to the lower lows. Moody's outlook change will impact the market. The change of the outlook to negative by Moody, will the market shake on this news or not, we'll know in the Monday. And retail earnings are close and watch. I would like to know like how the Walmart and Target and few other retail stocks would be earnings would be for the, and their guidance would be. Seasonal chart shows this week is bearish, so we already see next coming 5 days the based on the seasonal chart it's going down. So looks like it's bearish to me, and it's a OPEX week, so a lot of volatility we can expect in this week. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel, and if you like them, please subscribe. Please hit the bell icon so that you'll get notification whenever I upload a new video. And please share this content if you have friends looking for similar kind of content. Thanks so much. Bye bye.